We are live. Hello and welcome to The Lion Show. I'm your host, your favorite business coach, Robert Lyon. Today, we have the great privilege of talking to Rocky Lalvani. He is a Chief Profitability Officer, just an amazing guy, knows a lot about money and business, and I'm just super excited to have him on the show today. Rocky, why don't you introduce yourself and kind of tell everybody who you are and what you're up to?
Thank you so much for having me on, Robert. And as you said, I'm a Chief Profitability Officer. I was shocked to learn that most business owners don't look at their financial reports. I'm like, how can you own and operate a business and not understand the business of business? And what I found out is that most business owners do what they love, and they're not accountants, and they don't want to be accountants, and they don't speak accounting. And so we've got this major disconnect between wanting to have a business and then the actual operations side of the business and understanding the financials. The reality is if you can understand the numbers in your business, business is easy. If you don't, it's hard. And that's probably why so many business owners struggle and so many businesses don't survive over time, is because they don't understand their financials and they're missing a lot of things.
So when you're doing this kind of work and you're helping small business owners, what do you think is the number one struggle these business owners are dealing with, and how do you kind of help them rewire their brain or something?
The biggest struggle we have as business owners, and it's the same struggle people have, we spend too much, right? You've heard of lifestyle inflation, right? You start making 100 grand a year. You're like, okay, life should be great. Wait, where's the money? It disappears. The same thing happens in business. You know, the guy's got a 7-figure business. I got a 7-figure business. I can afford all this. No, you can't. There is not that much money that you think there is, right? So I'll give you an example. If you've got a 5% profit margin, for every dollar you spend additionally, you need $20 in revenue. But most people aren't thinking in those types of ratios. They're like, dollar comes in, oh, I'm going to spend $1. No. It doesn't work like that. And here's the reality. I have a Bachelor of Science in Economics. I have an MBA, right? I went to 13 years of school before I did that. Never was there a class that says, here's a class on money. Here's how to build wealth. Here's how to do that. Even with, a BS in economics and an MBA, they don't teach us how to build wealth. And so that is essentially the problem. We spend all this time to make money, but no one teaches us how to handle money.
Yeah. Well, let's get into the systems. Like how do you help these people? What are the steps you think to profiting first, and to, like, is it about frugality or is it about just having a system?
It's both. So A, it's having a system, and B, it's about frugality. So let's start with the beginning. Your accountant, first of all, your bookkeeper's job is to log transactions, and that's what they do. They just log your numbers for you. For most business owners, their CPA's job is to do taxes. And neither of those things are focused on profit. As a matter of fact, your CPA actually is incentivized to make you less profitable. Because when you call your CPA and you say, how much do I owe in taxes? And they give you a big number, you go, you suck as a CPA. I don't want to work with you. Right?
Yeah.
But if your CPA says to you, I think you should go buy that 6-ton, F-350 that you want, because we'll get a big write-off this year. You're like, oh, my CPA said I can buy a big truck. And now he tells you your tax bill's, less. You're happy. He's happy. The car dealer's happy. But who's getting rich? The car dealer, not you.
Yeah.
And so therein lies the underlying problem there. The penalty for building wealth in your business and being profitable is a tax bill. And it doesn't make sense to spend $1 to save 20 or 30 cents in taxes. It's a losing proposition.
Right.
The other thing is your accountant has to follow what's called generally accepted accounting principles. They do GAAP accounting. So their equation for profit that they've been taught is sales minus expenses equals profit. Well, where's profit? It's the leftover, the end, right? You go to your accountant at tax time, right? They say, congratulations, you were profitable. Here's how much you owe in taxes. First question is, well, where is that profit? And they laugh at you. And they go, well, you spent it. It's just a paper number.
Mhm.
And so the system's broken. And so what Mike did, and this all comes out of Mike Michalowicz's book, Profit First. And Mike had the same problem, right? He actually sold his businesses, walked away with 7 figures, and then promptly blew it all. And he said, this can't be right. Like, how do I get to rock bottom after making so much money?
Right.
And he said, he looked at the formula. He said, we got the formula wrong. So he goes, the right formula should be sales minus profit equals expenses. Now profit comes first and your expenses are a leftover. The equations are the same mathematically, but the mindset dramatically shifts now. So now you're saying, I'm going to take profit first. Now you say, how does this work? Because I'm struggling now. How am I going to make this happen? And I'm going to show you how to make this happen in baby steps. Okay. But the first thing we need to understand is there are certain universal principles that always apply no matter what. So let's take one that everyone understands, gravity, right? I think most of your listeners are in the United States. There is no difference with gravity in the United States, in China, or on the top of Kilimanjaro, or at the bottom of the ocean. It works the same everywhere, right?
Uh-huh.
So there are other laws that apply that are the same. The first one of those is called Parkinson's law. And most people have never heard of Parkinson's law. Parkinson's law says we will use up all the resources allocated. So I come to you and I say, I want to open a new location. You say, great, what's your budget? Well, I've got $200,000. How long till we open it? 6 months. Invariably, it will cost $220,000 and take 7 months because that's the budget in the time frame we've given it. What if I came to you and said, hey, we want to open a new location. How much you want to spend? 20 grand. When do you want it open? 3 weeks. You as an entrepreneur are resourceful. You know how to get things done. You'll figure out a way to get that done in 3 weeks for 20 grand. It's just like your kids, right? They get a report. It's due in 3 weeks. It takes them 3 weeks to do the report, which is a lie because they waste the first 17 days, right? And then the last 2 days they crunch to get it done. Mm-hmm. So this principle applies to time and money. As a matter of fact, there's a whole nother book out there called The 12-Week Year. Have you heard of it?
Yeah, I love that book, actually.
So the underlying principle in that book is Parkinson's law. You give yourself a year to hit your goals, it'll take you a year. You give yourself 12 weeks, you'll get it done in 12 weeks. You become intentional. That same law applies to your money. Money, time, same principles. Now, you say to me, I'm struggling now. I'm barely getting by. How are you going to help me get this done faster? Well, there's another universal principle. It's called the Pareto Principle. You've probably heard of this one, the 80-20 rule, right? Yeah. 20% of what we do gets us 80% of the results, which means 40% of what we do provides 96% of the results. So why don't we just do the 40%, take the 96% and say, screw the other 4% and have 60% more resources. Yeah. You say this can't be true. It is true. In your business are pools of profit. So Jonathan Burns is an MIT professor. He analyzed large corporations and he went in and he looked at them and he said in an average large corporation, the majority of their profits come from 20 to 30% of what they do. 80-20 rule, right? 20 to 30% of what they do are unprofitable. And the remainder is barely break even. So as you look at your business, where are your pools of profit? Where are the things that you do that are super highly profitable? And where are the things that you're doing that you're losing money? And pay attention to that. Most business owners with their accounting system can't honestly tell you how much it costs to deliver their product or service. They don't have clarity from all the inputs involved. How much were the raw materials? How much did we add to it? If you're in a retail business, or how much was my shipping? How much do I pay for all the other services? What's my overhead? Nobody sits down and figures all that out. When you sit down and figure all that out, you'll get clarity on where the pools of profit are in your business. And then you shift your efforts to the 20% that give you the 80%. And then you go find another 20% that give you another 80%. Now you got 40% of your money, 160% results, and 60% to go enjoy your life. Because it's nice to have margin. It's nice to have fun.
Yeah, I love it. Definitely shifts the way that you think about things. But I mean, running real businesses with people, there's so many different variables. I think what you're saying is that you can't hear it enough. I think any business owner, when you're making a business, you have a lot of things that you think are going to really make some money. They make a little bit of money. So you keep doing it because you just think, oh, it makes a little bit of money. Let's just keep wasting time on this effort. Let's keep having this person. I think it's just very powerful. So it's all about kind of your relationship with your profits, relationship with your money, and then taking the time to really sit down and do the books or look at it and things like that. I find that very, very awesome.
So what happens to most business owners? They're not looking at their financials because their financials are 6 weeks old. It's a rear view mirror. We got to go forward. What they do is they look at their bank balance. They go look at their bank balance and go, crap, there's no money in the bank. I got to go sell. Now, what do? They sell to get revenue. And so what do you do when you have to sell to get revenue? You discount. Right. And now what was profitable becomes unprofitable. And yes, you just brought in more revenue, but you brought in the kind of revenue that's costing you more money to do it than it is to deliver. Your entire company is running at 130% now to put out this extra fire, and you're making less money.
So how do you think you actually sit down, look at your expenses? I mean, is it basically just a matter of, this sounds awesome and I want to do it personally in my business now. So I should sit down, look at the books, really examine where the most money is. No, that is not your zone of genius.
Okay. You haven't done it. And when you go to do it, the first words out of your mouth are, I just want to roll up in a ball and cry. I don't want to deal with this because this is annoying. I hate it.
How'd you know that?
Because that's what every single business owner tells me. They go, you know what? I think I'd rather spend the weekend listening to my mother-in-law, right? That's what they say. So no, we don't want to make your life difficult. We don't want you to do things you hate. So I'm going to give you a simple system that works that you can implement. Mm-hmm. You're going to go to your bank and you're going to open 5 bank accounts. And we're going to label each bank account with what its purpose is. So the first account, we're going to call it the income account. And in the income account, all you're going to do is every time you get revenue, it goes in the income account. Yeah. All right. Your next account is your profit account. You're going to set up a rhythm. Maybe everyone's different. Some people do it once a month. Some people do it once a week. Most businesses do it twice a month on the 10th and the 25th. They sit down, they look at their income account. They go, okay, I decided I'm going to be 5% profitable. They put 5% into their profit account. So it's that simple, right? Simple math, simple operation. Next is your pay. You took the risk. You're doing the work. You put up the capital. And why is it that you as the business owner are always getting paid last? You're the backbone of America. You're the people going out and doing the hard work and hiring half of America. You deserve to be rewarded for that. Right. So pay yourself first, please. And so we're going to know what our income is. Our income is maybe 10% or 15% of our revenue. And so I'm going to look at my income account and I'm going to put that percentage into my owner's compensation account, my owner's pay account. The next account is the dreaded account. It's called tax because it's not your money. It's the government's. Right. Don't pretend it's yours and spend it. So you're going to take a percentage and put it in the tax account. We recommend 15%. On average, unless you're a highly profitable business, 15% of total revenue usually covers your taxes. You can figure it out for your business, higher or lower. Here's the thing. I'm going to tell you a story. So Mike is in the recruiting business. Yeah. Mike had a blowout year one year. His sales were through the roof. So you know what happens? You pay your quarterlies based on last year's sales. So he was paying his quarterlies based on last year's sales. Tax time comes, the accountant calls and goes, I've been dreading this call for 3 weeks. He's like, what's wrong? She's like, you owe a ton of money. Your business grew this year. He said, I know. I expected it. He's like, how much? She's like, you owe the government almost $100,000. So what happens to most business owners at tax time? They freak out. How am I supposed to pay that? Again, they go back to unprofitable sales over the next 3 weeks to cover the tax bill. What Mike said was, no problem. I'll drop off checks tomorrow. Huh. And she said, in my 20 plus years of doing this, no one has ever said that to me, right? This is the time where you curse your tax accountant out. Mike had more money in his tax account than he needed. All of the people I have who use Profit First hate tax time, and they love tax time. They love tax time because they have the confidence to know that when the tax bill comes, they can stroke a check. And as a bonus, if they have extra money in a tax account, they take it out and they go on a trip and they go have fun with their life because they oversaved for taxes.
Yeah, I love that.
Now, whatever's left goes into the OPEX account, operating expenses. So when you go to check your bank balance, you look at your operating account and you've already allocated for profit, you've allocated for your pay, you've allocated for taxes. Some businesses will set up extra accounts. If you've got a high cost of goods sold, they might allocate to cost of goods sold so that the next time they need to place an order, well, they're like, okay, I need a $50,000 order. Let me go look at my cost of goods account. I got 50,000 in there. Hooray. I can go order goods and not even think twice about it. And then the rest is in your OPEX account, and that's what you spend off of. So what we're doing is we're giving every dollar a job, and we're now using Parkinson's law because we're forcing you to stay within your operating expense budget. We're forcing you to be more thrifty. We're forcing you to look at your business in a much tighter, more efficient way.
Yeah, that's a wonderful way to just do everything. I wish I would have learned this years ago. Where you been, man?
Right here, waiting to come on your show.
Oh, man, I think that's wonderful.
So here's the thing. You cannot go from where you are today to where you need to be. All right. That's just the reality. But you can start today. For most people, we tell them, how about we just take one step today? Just go open one account, name it Profit, and every month put 1% of your sales in there. Because I want you to see the power of compounding, again, another universal principle, and how it works over time.
Yeah.
And so if you do that, you'll start to see that this actually works. And then over time, you can start to add the other accounts. In the beginning, it's going to be a struggle. I tell my clients it's going to take 1 to 2 years to get from where you are today to where you want to be, because it takes time to move the boat, right? You can't just stop spending tomorrow. If you do that, your business will blow up. Right. But you can start taking the time every week to ask yourself, is there a better way to do this? Is there a less expensive way to do this? One of the things that we tell people to do is, after you get this set up, go download your bank transactions and your credit card statement from the past 60 days and go down for each and every line item. And the first thing I want you to say is, does this do anything for my business, or is this a vanity spend? So a vanity spend is that big pickup truck that you don't necessarily need to have. The vanity spend is the fancy office that your client doesn't give a damn about, right?
Yeah.
What is in your business that you're spending on that's nothing but vanity? Stop spending on it. The next line we're going to look at is something that you need for your business, but that's not necessary for the sales. Okay, so internet, we need it in our business. We need to pay rent, right? Mm-hmm. It's a necessary expense. We need all these software systems and so forth. So for these types of expenses, what we do is we challenge you to look at them and say, is there a way I can cut these expenses? So for example, you sign up for Software X, you signed up at the top tier. The reality is you use the bottom tier of the service. So if that's the case, why not drop down to the bottom tier? You can save hundreds of dollars a month. If you're doing Amazon ads, like Amazon will even tell you, hey, you're spending $20 on ads. If you spend $12 on ads, you'll get 96% of the results. Well, okay, let's cut our Amazon to $12 because the $8 isn't worth the 4%. So it's constantly just challenging this, sending an email to your insurance agent. Hey, can you lower my insurance bill? Is there anything that's out there that we can do? You know,
Yeah.
calling all your vendors and saying, hey, is there anything you can do to help me lower my bill? And then you come down to there are certain parts of the business that you have to spend on that are required to deliver whatever your product or service is to your customer. Then you've got to start thinking about your business. Like, how do I change the way I do business? How do I look at it totally differently? And this is this is the stuff that takes 1 to 2 years. One great idea on how to deliver your product or services without spending money and being so we tell people you don't need more resources, you need to be more resourceful. Most of you are when you have the time to think. But most of us don't have the time to think because we're too busy running in the heat of our business and trying to fix cash flow and everything else. But if you'll take the time to think about your business, you will see dramatic improvements. So there's a baseball team down in Savannah, Georgia called the Savannah Bananas. They are the number one profitable, like minor league team out there.
Huh.
He knew that he had to do something different. And what he realized is people aren't coming here for baseball. They're coming here to be entertained. And he goes, how do I get free entertainment? And so literally the baseball players sing and dance. They get grandmas coming out to dance on the field at 80 years old. The audience loves it. His stadium is full and he's not spending any money because he was more resourceful and he thought about his business. We all have businesses that we can figure out a way to do things for less. It comes back to the Pareto Principle, the 80-20 rule. Find your 20s that give you your 80s.
Yeah.
But you got to step away. You can't do it in the grind. And most business owners don't spend time to step away.
Yeah. I own a manufacturing company, so I'm still trying to like recover from Christmas because this Christmas we sold so much and it was just like I didn't even want the money anymore. I was just so tired and burnt out and just couldn't do anything. And now that I'm trying to like recoup from that, I'm trying to refocus and trying to look at things from a different way. And it's definitely been an enlightening thing for me because you know I've had this business forever. It's just getting super successful, but I'm burning out, and it's just such a pain in the ass. But I love the 5 bank accounts, but I also love what you were just talking about, how you have to take a step back, get creative with your business, because then you just have to find the time to actually get creative with your business too. Like it's just one thing to think about it. It's another thing to actually go out there and do it.
So empower your people.
Yeah.
All right. Right now, your employees have zero incentive to save you money. As a matter of fact, they're more incentivized to spend your money.
Mm-hmm. Yeah.
You got to change that whole mentality.
It's really hard to find people that want, well, I mean, I don't even think I can pay people to really care about my business. I can pay them to work, but it's up to.
So that's a cultural shift.
Yeah.
That is a culture shift where you find people who fit your culture. Here's the thing. You're in a manufacturing business, right?
Yeah.
If one of your employees could figure out how to do something differently that would change your profit by $100,000 a year,
mm-hmm.
Would you be willing to hand him a $10,000 check?
Yeah, for sure.
Go out. When's the last time that you went out to your employees and said, hey, we've got to find a way to get more done by working half as much and spending half as much. You figure out how we can work half as much and spend half as much, and I will give you massive checks.
Yeah.
I will hand you cash. That motivates people.
I'll try.
It does.
Yeah.
You have to set the stage. It's not like you're not going to go out there and tomorrow morning they're going to come to you with an idea. It takes time. But the first time someone sees you hand that one guy 10 grand, it's going to motivate the other people. And maybe for somebody it's $500, but $500 is $500.
Yeah, exactly. Yeah. No, I totally agree. I think that's a great way to do it. Or at least just give them the incentive that it's possible that, we can all make a little more money if we can all work together to put our brains together to work this faster or produce more or do something. Yeah.
And so I think one of the things is sometimes to just explain to them what's going on. So what kind of manufacturing do you do?
We do like high-end tables and wood sculptures. So they go all
Okay.
over.
So if you're building a high-end table, I would literally take the time to walk through get all your employees together and
Mhm.
explain to them all the costs involved in that high-end table,
Right.
right? Now, is every table come out perfect?
No, no.
So talk about the power of the cost of a mistake. If we make X mistake, how much does it cost? Your
Mhm.
employees have no concept, right?
Right.
But if you start to explain it to them and show them respect and say, this is what happens when we make an accident. How do we fix this accident? Because if we can prevent all these accidents, everybody gets a massive Christmas bonus next year,
Right.
a week of salary. Like,
Yeah.
let's put real money on the table. If they can make you wealthy, make them wealthy.
Yeah,
I don't
totally.
believe in cutting on employees. I always believe in paying people more and getting the best people that can help you. But you've got to change the whole way you talk and the culture of your business. So if they start to figure out how to prevent mistakes, that can put a lot more money to your bottom line.
Right.
Or how do
Reuse.
we repurpose a mistake?
Mm-hmm. Becomes a
And
shorter table. No, I was kidding.
it could be, right? Shorter table.
Yeah,
That's being
exactly.
resourceful, right?
Yeah. No, I love it. I think it's a great idea. So I'm all about the listeners' success and just having them, do better with their lives. So, is there anything that we haven't touched on with profitability or with anything with money that is a key to success that you think would be useful?
So let's talk about what you do with your profit.
Okay.
Because all of a sudden you're going to be profitable now.
Hmm.
Everyone says, well, I have to reinvest in my business. I say BS. You have to invest outside your business because you never know when things go wrong. You never know when COVID hits. You never know when you have a health issue. You never know when a family member has a health issue. You never know when technology changes the world and wipes out your corporation,
Yeah.
right? So if you can take your profit checks, every quarter we take we take half the money out of our profit account
Hmm.
and we remove it from the business. And part of what we do with that money is celebrate. So if you've got a family, go take them to Disneyland, right? Like
Yeah.
you work hard, you ignore the family. I get it. Now it's time to reward them for putting up with you.
Hmm.
And then take some of the rest of the money and invest it. So you can invest it in maybe buying the building that your company's in. That's a perfect investment because you're always your best tenant. You can invest it in real estate, maybe if you want to, if that's your thing, you can build out into real estate. You can invest it in paper assets in the stock market.
Hmm.
Some people, what they do is they create a leasing company and then like they buy all their company trucks through the leasing company and lease it back to the company. So now, they're making money in this new leasing business over here. They're lending their money to their company, and instead of paying the bank 6, 8, 10%, they're paying themselves 6, 8, 10%. So they're building these pools of wealth all around them. This is not an overnight story. This is a 10-year story. This is a 20-year story. I
Yeah.
don't tell people I'm going to make them rich tomorrow. You start with baby steps and you just keep going.
Hmm.
And
Have a
most of
long
you are
term.
already going to do this, but you got to fix the money part of it. And then you build your wealth.
Yeah. Long term thinking is also very key. Do you have any tips for being able to focus on multiple streams of income? Like how to balance them all or anything like that?
When you say focus, so let's dig into that a little bit more.
Well, I feel like I have a finite amount of energy and I like to invest in stocks and real estate and all the things you were mentioning and other businesses. And then I just spread myself too thin and I need to bring it back to my main business. Otherwise my main business suffers. So it's a constant juggling thing.
So if you're investing in stocks,
Hmm.
either create a basic system that works and let it
Right.
run,
Yeah.
or find a great stock investor. And I will tell you, trying to find a great stock investor is difficult because 95% of the people in that business are salespeople. They don't even understand what they're selling. So be very careful what you're buying.
Yeah.
For real estate's going to take time. So either you partner with somebody and you let them be the time guy while you're the money guy, or you go into different types of real estate deals where you're a passive investor and you're not involved and somebody else is doing the work for you. Are you going to make as much? No, but you already have your main thing that you're focused on. And so draw the lines and the more you can systematize, the better it is. And that's a big part of what the 12-week year is along that. But even within your business, systematize your business. So Mike wrote another book called Clockwork, which is just like the E-Myth. If your business needs you and you're constantly putting out fires, you're the biggest problem in your business. Because you haven't created a level of trust and you haven't created systems and operations to run your business.
Right.
You got to get yourself out of the way.
Yeah. Such a hard thing. And it sounds it sounds so good, but it's a really hard thing to do because it's like my baby. I built this from nothing and now I got to get out of the way.
So my kids are now of college age.
Yeah.
I built them. I launched them. I got to get out of the way. It's life, right?
Yeah. Yeah. It's the truth.
You have to, your highest value to your baby is thinking time. If a business owner would spend 15 minutes a week thinking about his business instead of stuck in the grind of his business, I guarantee you that they will be super profitable. Imagine doing that an hour a week. We spend so little time not thinking about our business.
I already know
that's the key.
The 20% that I could do right now that would totally make way more money and do everything. And I keep putting it off. It's just like, it's the gerbil in the wheel. I can't get off the wheel.
You got to get off the wheel.
Yeah.
So, sometimes you need somebody to hold you accountable. Sometimes you need, the biggest thing I do for my clients is literally I give them accountability. Hey, here are 3 things you got to accomplish this month. Go do it. I create the space for us to spend time working on your business instead of in your business. We create the metrics to look at, hey, what's most important this month? And what do I need to work on this month? And so sometimes you need to do that. And I know a lot of business owners, they don't have the money. It's time's tight. What I tell them is, if you want an idea of where you're really screwing things up, just go ask your spouse. They're usually more than happy to tell you all your problems that you never listen to.
That's awesome. Yeah, that's pretty funny. Let's talk about your practice and what does that look like? Like people come to you and then you help them focus on profit first and you put these systems in place. What does it look like?
So basically what I do is I help them. We set up the accounts. I figure out their initial percentages of where we start and we set targets. And like I said, those targets are probably 2 years out there. And then we work together every month and I actually go into your books and I dig down into the details. I find some of the mistakes the bookkeeper might have made in classifying stuff. I challenge you on your spending, right? I keep you away from the shiny objects. Yeah. I help you be more focused. And then we actually can sit down and every business is different. So I customize everything for every business. We might sit down and create a 13-week forward cash flow so that you can see what's coming in the future and what it looks like. We'll set up your rhythms and then we'll track your progress to goals. We might sit down, depending on the type of business, I might dig in. So like for my e-commerce sellers, I go into their Shopify. I'm like, let's run profitability reports. And every time I run profitability reports for e-commerce sellers, I find all these things that they're selling for less than what they're paying. In a sense, because you have to pay, not only do you pay for the cost of the item, but you got to pay the Amazon or the Shopify fee and the credit card fee and the shipping fee. When you add all that up, you have to be very careful what's going on. So usually I help them say, okay, this is what's profitable. This is what's unprofitable. And then we brainstorm. How are we going to pivot? How do we eliminate middlemen? How do we change the way we do business? And we focus on getting things in line.
That's pretty awesome. So how did you learn all this or come to be? Is it from college or is it just from life? Like give what's a little story.
So this is my natural talent. I just
Mm,
didn't understand how valuable it was. So I'm naturally frugal with my money and anyone else's.
yeah.
It's just the way I've always been
Uh-huh.
because I've always it's actually fear.
Yeah.
That's the underlying principle. And for me, it was when I was growing up, I'd read the Wall Street Journal. Okay, I'm a crazy kid, right? Every time there was a recession, which was about every 7 years, you would always hear these stories of guys in their 50s at the pinnacle of their career. They'd lose their job and their entire world would come crashing down. And I'm like, I never want to be that guy. And so I'm like, I have to build wealth. Well, how do you build wealth? How do I do this so that when I'm 52, if the world comes crashing down, I can say, F you, I'm done. I don't have to worry.
Yeah.
And so that's what I did. The second skill I have, when I was in high school, the first electronic spreadsheet came out. It was called VisiCalc.
Uh-huh.
And I was going into Fortune 500 companies, into their accounting department going, here's how you get off of a paper ledger and you use electronic spreadsheets to do your stuff. So
Oh, nice.
everything in my life is spreadsheet oriented,
Huh.
right? There's a system and a spreadsheet for everything. So when we go to the grocery store, we have a spreadsheet that's designed in accordance with the store. So it sits on the fridge. You mark off what you want for the week when you use it up. And then when you go to the store, you just go right down the sheet and it walks you through the store
Yeah.
and you're out the door. And you're not looking around, getting distracted and buying all the stuff that you don't need. You're on a hunt. It's a game. How quickly can I get things on the list and get out the door?
That's awesome. Yeah, my girlfriend does something like that too, and it's just pretty cool. It's really so. You just always been organized and had this profit first, and then I love what was it? You said there's always a system or a spreadsheet for everything.
Yeah, there is. Everything
That's
has
the
a
best
system
quote.
and a spreadsheet. Well, you think about it. Go back to your business, right?
Yeah.
Why did a mistake happen? Because somebody didn't follow the system or there was no system.
Right. Where they went off their
Okay.
own
If
idea.
you follow and implement a system and you have checks and balances, your mistake rates will go down dramatically.
Yeah.
And it empowers the people to do that. So, I was telling you when I started, I have a podcast. I
Mhm.
have this whole checklist of how I release my podcast.
Yeah.
And so when I need to go to it, I go to the checklist. Oh, nothing's checked. That means I need to work on this, right? So now I know, because I can't remember what I did, what I didn't do.
Yeah.
And I just go, instead of thinking, what do I need to do? I just go down the checklist and I click, do it, click. And then I'm done like that.
Yeah.
And everything's done correctly.
Helps you stay focused.
It's focus. So that goes back to the 12-week year. The 12-week year is the same concept.
Mhm.
Focus, time, things and tasks that need to be done, get done. Like if I have something like something pops up in my head right now, oh, I got to do something. I'm like, okay, I open up my calendar. I look at a gap next week and I put a task on it. And I just put what I have to do. And when next week rolls around, it's 11 o'clock. Oh, I have a task to do. I hate doing that task, but I have a task to do. Let me just do it. And I do it and I move on and
Yeah.
everything gets done. It's organized. And so I stay efficient without running around like crazy. Because we want to work half as much and make twice as much money.
Right.
We don't want to work killer hours and grind and suffer. And that's not fun.
Yeah, I've already done enough of that.
You've done enough of that.
Yeah, move on. Let's get to the next part. Make some spreadsheets. No, I always do way better whenever I have like a list of tasks, because then I know what I'm doing. Next step, next step, next step. And then I have it all for my employees to do it. Then I'm the one that just is like, oh, I'm just going to do whatever the hell I want to do all the time. No, it needs to get better to be a little more disciplined, be a little more on there. Well, Rocky, it's been amazing talking to you. I really appreciate you coming on the show. Why don't you tell everybody kind of the best ways to find you online or to get in contact with you?
So the podcast is Profit Answer Man. If you want to hear a lot more of these stories, success stories, I have people come on who've used the system and how it's worked for them. Check that out. My main website is profitcomesfirst.com. And from there, if you want to get 2 chapters of Mike's book for free, you can put your email there. I'll send you the book for free. There's a link to my course. Everything you need, you can find there. If you've got a question, email me. It's Rocky at Profit Comes First. I answer my emails. I help people out. And if you read the book and go, I have this question, I'll just answer you. I don't.
That's awesome. How did you become, a chief profitability officer? What is that? How did that become?
You know what? It's these days you have to define your market, right?
Yeah.
And the closest thing to what I do is CFO. Most small business owners don't want a CFO. That's not what they're really looking for. And so I thought, what would really help them? And that is somebody who's focused on profitability. And you don't need me, as a business owner, you wear multiple hats.
Yeah.
So just remember, one of your hats is profitability. The whole reason you're in business is to make a profit.
Yeah.
And yet no business owner remembers to put on that hat and sit down in the profit seat and say, okay, how do I be profitable?
Yeah, I love that. That's awesome. Then you have somebody who's in charge of the profits. Genius, man. That's freaking awesome. Well, I think we've had a great conversation today. I think everybody listening has absolutely gotten a lot of wisdom and nuggets and was ready to profit first, man. So thank you so much for coming on here. I really appreciate it.
Thank you so much, Robert, for having me. It was a blast.
Yeah, thank you, everybody listening. Thank you for investing the time to learn and listen to us talk about profits. And I think it's just been so amazing just to have him on the show and to learn a lot. I think everybody learned something. So go check out his website and go check out everything else. Thank you very much, everybody. Talk to you later. Bye.